Good morning, good afternoon, good evening from wherever you're watching me from. Welcome back to the channel, everybody. Today, we're looking at 7 rules for scalping that I've learned so far in my years of trading. Many people come to this trading business and they don't have rules for themselves. They don't set rules for themselves. But as I'm telling you today, you must have rules for yourself, okay? For every system to work, there must be rules guiding the system. Which means that as a trader, as a day trader or a scalper, you must have rules protecting your trades, okay? So rule number one is that be precise on your entry. Be precise on your entry. What does it mean? It means that you must have a strategy such that you have specific entry rules. So you are precise. You know that we are looking for this, you're looking for this. So let's see, for example, let's say you want to buy a breakout trade, right? So let's see that your rule says that when the market breaks out and retests and gives you maybe a bearish pattern, you take the trade. So you have to be precise. So the market will break out of the pattern. After the market breaks out of the pattern, the market retests and down, gives you a bearish pattern, and it's a bearish pattern, and then you will take the trade down. Maybe that is your rule. Very simple. You take the trade down and you take your stop loss. Simple. You take profit on your stop loss. Very simple. So you have to be very precise on your rules, okay? Precise on your entry. Your entries must be very precise. Don't be like you're not sure. So let's see the market go to a point like this. You're not sure, don't know where to buy, where to sell, don't know what you're actually looking for. Then you cannot become a good scalper. You have to be very precise on your entry. I know that okay, when this and this happen, I'm buying. When this and this happen, I'm selling. That's all, guys. Don't wait and the market will be playing. The market will be playing and then now you're searching for trades. You're searching for when to enter or when to exit, guys. If you do that, you can never even find a trade. And if you find any trade, you're going to be losing, okay? So you have to be precise on your entry. Okay, I'm buying breakout continuation. Straightforward. So when the market breaks out, what do? You go to market to retest and then you enter. When the market retest gives you a bearish pattern and then you enter and you're out of the market. Very, very simple, guys. Very simple. Very simple strategy and very simple entry. So we have to be precise on the entry. You know what you're looking for. What are you looking for? You're looking for bullish engulfing pattern or bearish engulfing pattern or whatever strategy is it. Just like be precise on your entry. You must know what you're looking for. That's the rule number one. Rule number two, always put stop loss, guys. Never enter a trade without a stop loss. Don't be ridiculous, okay? Don't be ridiculing yourself, guys. Never enter a trade without a stop loss. Why do you have to put stop loss? Stop loss is protecting your account. And you know that you're not supposed to risk your whole capital, right? You're risking percentage of your account. Maybe you're risking 5%, 2%, or 3%, or you're risking even maybe $100 or $200. You're risking a specific percentage or specific amount of your account, which means that if you don't put stop loss and the market goes against you, you can lose half of your account or you can lose your whole trade. So make sure that you always enter a trade with a stop loss. So that this is a trade you took, you decided to take this trade and you entered here, right? Based on our breakout continuity trading strategy, you enter when you see a bullish engulfing pattern, right? So we entered here. Where should you put your stop loss? Your stop loss must always be there. Always must have a stop loss. But this pattern was too big, so you have to wait a little for the market to retrace, okay? So you must always put a stop loss. Then you put a stop loss behind the pattern. Always put a stop loss every day. Never enter the market without a stop loss, okay? Stop loss is the most important thing in trade, not only the take profit. Always think of how much you're going to lose before you even enter a trade. When you're entering a trade, don't think of the profit, okay? Think of how much you're going to lose before you enter a trade. Before you enter any trade, ask yourself, okay, if this trade goes wrong against me, how much will I lose? How much am I going to lose to my capital? Don't think of the profit. Okay, amateur traders, what they do, they think of how much they can make. So they don't think of their stop loss, so they end up losing their money. But if you think of how much you can lose and you protect yourself, you are playing a defense game, right? In a football game, what will happen? You have to play more defense first, right? More defense. You have to pack your defense and then you pack your midfield before you play more offense. The strikers will go and score the goals, right? The same happen in trading. You must have more defensive system first before you think of scoring a goal. Very simple. So you must always put a stop loss, okay? Always enter a trade with a stop loss. So another example, for instance, assuming this trade that we just took here, let me create this, guys. Assuming this example we just took, assuming you bought here, you sold here, your stop loss should be somewhere here, right? So you put your stop loss, you must always put your stop loss, okay? Per your criteria, always put a stop loss per the amount you want to risk before you think of even entering the trade. You put your stop loss and you put your take profit. That's all. Always enter a trade with your stop loss. Never enter a trade without a stop loss, guys. Never do that, okay? Rule number 3, always buy small lot size. What's a small lot size? Let's assume your account is $1,000 or your account is $3,000 or let's assume on an average $5,000. How much lot size are you supposed to buy? Are you supposed to buy 5.0 or 2.0 or 1.0 or 0.1 or 0.5. How much are you supposed to buy? Always buy small lot size according to your account. Okay, so if your account is maybe $1,000, let's go to the average guy who has $1,000 in his account. How much are you supposed to buy? At least 0.5. Simple. How much small? Because if you're scalping, you're taking quick profit. Okay, so you're buying small, so that you can gather enough trade within the month. So you're scalping. That's why you are a scalper. You don't buy huge lot size. Okay, buy small lot size. So you take small trade. When you put them together, then you get profit. So always use small lot size. Okay, lot size of 0.1, 0.2, 0.5 or 1.0 maximum. Okay, if you are scalping, you don't buy something huge. Buy a small lot size so that when the market goes against you, you don't lose your whole capital. The next rule is never get emotional, guys. Never get emotional when trading. When you enter the market, you don't get emotional. Let the market go to your favor or hit your stop loss and you're out of the market, guys. Never get emotional, okay? What is emotions? In trading, you're going to face so much emotions. For instance, fear of missing out, fear of losing a trade, fear of not hitting your profit target. You're going to get so much emotions, okay? So never get emotional. You have to trade like a robot. You enter here and you exit here. Simple. After you enter the market, whatever happens, you don't care, okay? Enter the market and you're out of the market. That's all. You enter the market, you put your stop loss, and then you put your take profit target. After that, you're out of the market. You don't care whatever happens, okay? Never get emotional. Emotional like, I should have taken more profit. Like, for instance, this trade, you entered here, you entered somewhere here, your stop loss was somewhere there, and then you take profit somewhere here, and you see that, oh, I should have stayed in the market for a long time to take all this profit. Guys, why are you greedy? Don't be greedy and don't be fearful, okay? You must know when to enter, you must know when to exit, and never get emotional. When you enter the trade, you leave the trade to play by itself. It is your job to enter the trade. It is the market job to play. Guys, that's it. Your job as a trader is to manage your trades. You manage your losing and you enter the trade. So you're like a management or a manager of a system, okay? You're just managing the trading system. When you see this pattern, you enter the trade. If you don't see, you don't enter any trade. When you see this pattern, you put your stop loss here. If you don't see, you don't put any stop loss there. Very simple. You take your profit 1 to 2 and you're out of the market. How the market is going to play, you don't care. If the market will go all the way, come back, like this zone, assuming you are a new trader, you enter the market here, and then the market went all the way in your favor, it was coming back, your profit target is somewhere here. That's not reaching profit target, and it was coming back, you get emotion and you exit the trade. See, the moment you exit the trade here, what happened? The market went back and then hit the profit target. And now you say, wow, I should have waited. And you start crying, guys. You start regretting because you were emotional, okay? So always when you set your profit target, never get emotional. Always make sure that your profit target is hit or your stop loss is hit, and you don't get emotional. Whatever happens, you don't care. Whatever the market will do to get there, you do not care, okay? So you set your stop loss, set your profit target, and then you're out of the market. You take your eye off that particular market until the market finishes playing before you record your trade. The next rule is to get a very good timing or good schedule, good trading schedule. So for instance, you decide to trade 6 a.m. early in the morning per your local time, then you must always make sure that at 6 a.m. you are on your desk, okay? You're on your desk waiting for trade setup to appear, to emerge themselves, guys. If you don't have good schedule, good trading schedule, then you are not a businessman, right? A businessman, you wake up in the morning or you wake up whichever time you've planned, and then you make sure that you are always open for business. You open for people to come to your business, come and buy something, right? The same as in trading. If you are trading, you must always make sure that you are available. You are available at that particular point. So you say, okay, my local time, I'm going to wake up 12 p.m. or 12 noon. Always make sure you wake up. Simple. But per my local time, I'm going to wake up 7 p.m. That's maybe per where you are in this part of the world. That's where maybe the market opens. You wake up the same time, guys. You are always on the market. I'm spending 4 hours. After you spend 4 hours, you're out of the market. I'm spending 2 hours. After 2 hours, you're out of the market. Or I'm spending 6 hours. You have to decide, guys. Make sure that your schedule is fixed like a worker, okay? When somebody calls you within that period, you say, I'm working, guys. You tell the person, I'm working. You are working. So if somebody calls you, hey, let's go out, let's go and do this, you say, I'm working, okay? Me as a family man, when my kids are worrying me, they know that if I'm on a chat, they shouldn't come to my room. Okay, they shouldn't come to my training room. Just that sometimes you hear their noise at the background at the hall and the playground. Sometimes it's very distracting, but I just tell them, the moment they see me enter my training room, nobody's come and knock. That's all. If I'm trading, I'm trading. Business is business, guys. It's the same business I'm going to feed them with. So I make sure that I give them a very strict rules, okay? They don't come and worry me. The same thing, you guys must also do the same thing. Make sure that when you're trading, you have a specific time, okay? Specific dedicated time where you're going to trade, and you don't make sure that you don't miss those times so that you're able to become an effective trader. The next rule is to always make sure that you track your results. Every trade you're going to take, make sure you track your results. Track your results on an Excel sheet, okay, or a spreadsheet. Create your own spreadsheet, or the spreadsheet I decided to give it to you guys in one of my videos. If you want that spreadsheet, just send me an email and I'll just forward it to you for free, okay? Always make sure that you enter your trades in a spreadsheet, because if you can't track your record, then how are you doing the business? How do you know which patterns are profitable and which patterns are not profitable? Let's say you have 3 strategies. You have, let's say you have the breakout and retest, right? Or let's say you are using my triangular trading strategy that I taught you. So you decide to enter the market when the market breaks the triangle, okay? You decide to enter the market when the market breaks the triangle, and you do not record all these trades. How do you know this strategy is profitable or not, guys? How do you know? When the market breaks, you decide to sell, or when the market breaks, you decide to buy. But you don't record any of these trades, guys. You don't record any of these trades. So how can you become profitable if you don't record any of these trades? Tell me. You have to record all these trades you are going to take, the pattern, the trading strategy you are going to use. You record them down, and the risk, reward, the profit, okay, as I showed in one of my journal. So you have to record all these trades in the journal, and then you have to track a record within the month. Notice that, okay, this month I took 20 trades, this month I took 30 trades, I was profitable, or I made a loss, or I broke even. These strategies were very profitable, these setups were not that profitable. Within a month, or within 3 months, or within a year period, you should be able to track all your records to be able to show that, okay, these are my trading results, okay, before you can even make any amendments. So anytime somebody comes to me that I should teach the person how to trade, I ask the person, show me your track record. What is your track record? So if you don't have any track records to show me, I tell you, okay, which strategy are you trading? Show me your strategy, and then go back and track all your strategies. Either you are back testing or you are trading live. Make sure that you always track your strategies, okay? So you must always have what? A good track record, because every businessman keeps a book. Every businessman has bookkeeping record. So never enter a trade without entering your record in your spreadsheet, okay? The last rule is never to give up, guys. Anybody who is successful in this world never gave up on something, right? Look at Thomas Edison, Albert Einstein, all these great guys. What happened to them? All their inventions, what happened? They never gave up in life, right? It got to a point where people thought even what they were doing were not great, but they never gave up. They kept trying and kept trying and kept trying. Benjamin Franklin, they all kept trying and kept trying and kept trying. Now we use electricity, we use bulbs, and you're happy using them, right? When the light goes off and you're crying, because somebody's sacrifice, somebody never gave up in life. Somebody's entire life sacrifice, and they never gave up. If they gave up, do you think they would have discovered it so far? They wouldn't have discovered it. They would have just given up in life, right? So never give up. No matter what you're doing, keep in the effort, okay? Keep pushing, keep pushing, keep pushing, because one day, you don't know where you find yourself. Just like you have to be precise, okay? Be sure of what you're doing, and never give up. So that will be all for this video. Seto was your tuner for this entire series. Hope you've learned much in these lessons. The first rule, let's recap. The first rule, what? Be precise on your entry. Be precise means what? Your entry must be precise. For instance, look at this strategy. This is the same triangular strategy I explained to you here. Can you see? Look at the pattern is here. Very clear. These patterns are everywhere, guys. They're everywhere. Can you see the triangular pattern? When it breaks, you enter, and then you put your stop loss below. It's very easy to trade, okay? Be precise on your entry. Be precise on your entry, then you take your profit. The same triangular pattern is playing here. Guys, can you see it here? Be precise on your entry. 2, always put a stop loss. 3, always make sure that you buy small lot size. And 4, never get emotional, okay? When you enter the trade, let the trade goes to your favor, and you never get emotional. 5, you must have a good timing schedule where that every morning you wake up and you take your trade, okay? 6, you must have a very good track record. And 7, you never give up. Never give up in life, and I hope that one day you also become successful. This was Overs, your trainer, and hope you've liked this video. Please subscribe to the channel, and see you next time. Bye.